What we see is a everyday app battle. That why are these e-commerce companies coming into food delivery is because of the high frequency of these purchases, and it's the first time that these companies have moved their food delivery traffic straight into their own apps, and that's where a significant boost in daily activity, frequencies of users. But what this means is a more fragmented industry in food delivery, and we've seen in this summer, right? We have record high subsidies. We had initially 0 RMB for coupons for free milk teas, and that's leading to record high, well, we said around a peak of 250 million orders a day across the three platforms on a single day. That's 100% higher than what a usual day will be. And these competition, of course, has led to more milk tea orders, more restaurant orders, more delivery labor, and more jobs being fulfilled during that process as well. However, there's also a steep impact to likely these three companies' upcoming June quarter and September quarter earnings because of these subsidies, and also a more fragmented industry that these companies have likely need to meet, as you just mentioned, some of the being summoned and some meetings with the regulators on how to make this more rational and likely to benefit both the merchants, the riders, and also the end consumers.
But to be the dominant everyday app, it really is more than just price and speed, right? When it comes to deliveries, I know that Meituan, we were speaking with Kita here in Hong Kong not too long ago, and these drone deliveries, they really need to introduce other things to deepen engagement, whether it's product bundling or customer segmentation. What more can these companies do to make the customer stickier?
So what we see, or what we're looking at different versus the rest of the street that we're aware of, is that we think this duration of the competition will likely last longer than what people in the current market is expecting. Of course, we also think the intensity of the of this subsidy will peak in the September quarter because of the summer season, the hot weather that people are drinking more beverages and milk teas. So that the absolute loss will peak in the September quarter, but the duration of this competition will likely extend for longer. That means in the next summer or 2 summers after, we're still talking about 2 to 3 players trying to capture more users through the food delivery business and tapping into their own app. I think that the cross-sell is still what investors are exactly pinpoint focused on, is how many of these food delivery users are actually spending and buying things in their own shopping platform. And I think for the shopping platforms, you have the June 18th festival, and the next festival would be the kind of double 11 in November. And I think that the cross-sell usually happens best 1 to 2 months before the festival. But in this kind of third quarter peak season, we're also surprised to see how intense the competition has been between the number 1 and 2, which is between Meituan and Alibaba at this point in the subsidy war. And to gain more user traffic, gain more user mindshare, building a network that has a more similar cost structure, that's where the number 1, 2 are currently doing. We do think the duration will be longer. We think if there's more rational competition in the near term, it actually brings to maybe a more fragmented outcome in the next 2 to 3 years. So I think for the markets, for investors, they would need to know whether they want a more rational competition in the near term or a more kind of duopoly structure back in the long term, or a more benign competition from here on, but a more fragmented industry. So in our report, we're going to lay out the 3 scenarios that what investors should be focused on. And we think the eventual outcome is likely a more fragmented food delivery industry, because the e-commerce players are using food delivery as a substitute to some of their marketing and user acquisition channels, which could mean this duration of milk teas and a lot of subsidies could extend longer.
Meituan is the number 1 in the market and a leader by far over its rivals. What is the brand loyalty is there, and how can the other players, Alibaba, JD, catch up to Meituan? What do they need to do?
Yeah, so we've often looked at the internet and look into verticals and how the market share structures look. Initially, it's around a 75% market share for the food delivery leader Meituan. And that's quite similar to some of the verticals like music and mobility. And we think this structure initially has been very good for Meituan. And now with a entrant of JD in taking around a 10% share and Alibaba's fight at this point, we think Meituan has strengthened its offering. There has been coupons. There's also been membership programs. They've also been building up centralized kitchens as well. All of these will likely drive a better cost structure, better user experience, and the extension of food delivery to buying things on demand. And therefore, the story for Meituan has always been from food delivery to instant shopping with instant marts that you could buy things 24 hours and could arrive to your doorstep in 15 minutes or 15 to 30 minutes. We think that kind of proliferation of the three players, subsidies, building food delivery to instant shopping, that will likely generate around a 1.5 trillion TAM for the instant shopping retail market on top of a addressable market of 2.5 trillion that we see for food delivery by 2030, and this will be a key driver of a larger market, but possibly a more competition because of the big market size and the growth in instant shopping.